All right, welcome back to the show, everyone. Today, I'm excited because we've got Ben Kogut on the phone. Ben has been in commercial real estate for 16 years, where he became the youngest CCIM in the state of Texas. And today, he is a partner and head of investor relations at HJH Investments. And HJH Investments specializes in finding and acquiring credit tenant, double net, or triple net properties within the United States. And so, Ben's here to really talk to us about all things commercial real estate. So, I'll just stop there and say, Ben, welcome to the show.
Yeah, Matt, thanks so much for having me.
Absolutely. And for people not on video or not seeing the video, you look very presidential today. I'm digging it.
Thank you. Thank you. I happen to be in California at a commercial real estate conference for the next couple of days. And so I just got to sneak out to join you on this podcast. So it's good times.
Awesome. Well, we like to start everybody with the difficult questions here. What's your favorite ice cream?
Hands down, my favorite ice cream is from Texas. It's Bluebell. It's a combination of cookies and cream and chocolate chip cookie dough, and they call it a cookie two-step. So it comes in a blue container, and it's absolutely delicious. And my girlfriend, who's extremely healthy, does not approve of such foods, but they're delicious anyways.
Yeah, I'm smiling from ear to ear because I lived in Austin for about 2 years, but I was there when they had the Bluebell shortage. Do you remember that?
Yeah, Listeria got hit, and so people freaked out. But just like when Chipotle got hit with some health issues, everyone forgets about it because it's delicious. And
it's that good. Yep. Yep. Well, do you like toppings or no toppings? What kind of ice cream do you like there?
I'm a Heath guy. Let's throw some Heath on there.
Okay, I like it. I like it. So tell our listeners, what's the scoop? What do you do today?
Yeah, so I'm blessed. I'm a partner in a commercial real estate syndication firm. And our niche, kind of like you mentioned, is buying shopping centers, office buildings, and industrial properties. And my role in the team is investor relations, which basically means that I get to teach people about investing in commercial real estate, about earning passive income, and giving them opportunities to become partners in the projects that we syndicate. And it's absolutely the best thing that I've ever done in my career.
I love it. Well, how did your real estate journey begin?
Yeah, so after graduating from the University of Texas in 2004, I got right into commercial real estate as an agent / broker, helping people buy and sell commercial real estate projects around the country, or primarily in Texas, but also around the country. And that journey took me on the path towards getting my MBA. So I went back to school and got my MBA in 2010 and 11. And then, I started making money, and I was looking for opportunities to earn passive income for myself. And I started coming to actually this conference I'm at right now, called the Society of Exchange Counselors, introduced me to the idea of exchanging. And so I met my now business partner, Corey Harkleroad, at this meeting, and I made an investment with him through. He had a project, and I made an investment, and I understood now after having jumped in, like there's just something different about it. When you actually get involved in a project, you just start to understand things a lot better, as opposed to just having someone tell you about it. And then from that point on, I started drinking the Kool-Aid that I now serve, so to speak, I started eating the ice cream that I now get to make. And it's just been so many blessings, and we've bought. When I started with Corey, we had about $150 million worth of assets under management, and now we have about $350 million worth of assets. And I'm now promoted. I'm now completely in charge of all capital raising for HJH Investments, and we're definitely having a lot of fun.
That's a heck of a journey, and congratulations on your success there. When you first got out, you said you started as a commercial broker?
Correct.
Did you do anything in residential or just straight commercial from the start?
Yeah, I knew right out of the gate that I wanted to be involved in commercial real estate. It's a different mentality. It's more business oriented, less, oh, I don't like the color and I don't like the style and that layout. It's more, okay, show me the numbers. For us, what we like to invest in are, or what they all pretty much have in common amongst our portfolio, are real estate that has a high credit tenant with a long-term lease already in place. So we can use financial calculations to predict almost to the penny sometimes what the cash flows are going to look like for the foreseeable future. And so that allows us to make a better, more informed investment decision. And that's why we've been able to scale to the size that we have in a short period of time. You know, I find maybe you talk to many people that do syndication, aka raising capital to go out and buy certain types of real estate. What I'm seeing, and maybe you see something different, is most of the people that syndicate are buying apartment complexes or mobile home parks or something like that, which is great. I'm not here to bash that. There's a lot of opportunity in that sort of sector. But for us, we like the stability that comes with a really great high quality tenant that has high credit, that has already committed to a long-term lease. And that's where we start our search. And yeah, it's been great.
Yeah. So can you maybe break that down for our listeners a little bit further? So on the residential side, we're talking like single family houses, we're talking multifamily, we're talking mobile home parks. But on the commercial side, I know there's retail, there's industrial, there's warehousing. Can you kind of tell us a little bit more about what encompasses a commercial tenant?
Yeah, so one of the most important differentiators is the lease and the lease structure. And in commercial real estate, especially with like retail, office, and industrial, it's usually structured where the tenant is going to be responsible not only for paying the rent, but also for the jargon is triple nets. And triple nets, for those of you, your listeners that don't know, is the net, that's the triple, of the taxes, the insurance, and the maintenance. And so what that means is that if the property taxes go up, the tenant is going to absorb that and pay that. Same thing with the maintenance, landscaping or roof leaks or whatever. The tenant oftentimes is going to pay for that, and the property insurance. And so as opposed to those other asset classes you mentioned, like multifamily or mobile home parks or whatever, storage, the tenant usually pays their monthly rent, and then the landlord is responsible for those other types of expenses. And so it for us, it makes it more of a stable cash flowing asset, and it allows us to structure a deal to be able to provide our investors a monthly dividend. And so we know after the first month of ownership, we're able to distribute dividends to our investors. And people that are looking to have more of a passive income portfolio that's pretty consistent, they like that kind of thing, including myself.
Yeah, I would say that triple nets are definitely bonds wrapped in real estate, essentially, because once you offset the taxes, the maintenance, the insurance, the et cetera, then you really are just netting the rent. And a quick story I'll tell on that is I'm in Nashville. I own several properties in Nashville. Nashville had a 30% hike on their property taxes this past year, which on paper doesn't seem like a ton until you get that tax bill and you see what it does to your mortgage payments each month. And that took away a lot of my cash flowing assets into making them barely cash flow positive. So knowing that a tenant could take on that responsibility would have been huge there. Can you brought up quality tenant and tenant credit worthiness a couple of times. Can you help us understand, like, what does that mean? Who are you looking for that fits that profile?
Yeah, we've recently bought real estate occupied by a Walgreens or a Dollar Tree or a grocery store or an engineering firm. Now, recently, we've been buying medical office buildings. So these are tenants that, like you said, they have high credit, aka they can afford to pay the rent and the obligation of the lease that they have signed. And so that gives us and our lenders, because we do borrow money from the bank to be able to buy these properties, gives us more, consistent stability, knowing that they're going to be able to pay the rent, because we structure our deals where we pay our investors. So we need to have that consistency throughout the project to be able to do that.
Do you do any kind of like shopping malls or retail or anything like that?
Yeah, so shopping mall is, gives you the idea of like a big indoor shopping center. So that's not what we do.
Okay.
That's a different asset class, but we do, typical like a strip center or grocery anchored shopping center. And what I'm seeing is, some people will say, oh, retail's dead. Well, drive around your neighborhood. Does it look like your shopping centers are empty? And in most cases, in today's market, the answer is no. And so what I would say is, I'd say, like, first of all, I would always steer away from making a broad statement about anything or anyone in general. But I think retail, the secret's out about Amazon. And when you go and you look at these, shopping centers, you don't really go shopping there so much anymore, except with a grocery store. That's an exception. You're usually going there to go to a restaurant or a bar, or to go to the doctor or dentist, or get your nails done, or, some kind of service, things that are, not going to be kicked down, hopefully, by Amazon, right? So things have definitely pivoted in our industry. We track those types of things extremely closely. And, having, 15, 16 years of experience personally, plus the rest of my team, we know what to look for when we're trying to acquire these types of assets.
Yeah, I think that Amazon is definitely very disruptive, right? But there's certain businesses that Amazon won't disrupt, at least immediately. So where you go get your oil changed, where you grab your cup of coffee, where you go to a restaurant, sometimes groceries, even though I love ordering some Instacart because I hate going to the grocery store. Like, those stores are gonna need to still be around. And to your point, they have the credit worthiness and the balance sheet to absorb a lot of those taxes, insurance, and maintenance and things like that. So you recently wrote a book on your website around the 5 things to consider when investing in a syndication, and I kind of wanted to just go through a couple of those. Could you you had goals, diversify, criteria, track record, and then cash now is better than cash later. And I want to talk about that last one specifically because that is so monumental in your thought process around investing, is that cash today is worth more than cash tomorrow. Can you maybe expand upon that a little bit?
Yeah, so that was inspired by a Harvard professor that I read about named Bill Solomon, and he calls it the 4 rules of cash. And you hit on a very important one, which is cash now is better than cash later. And I go into a little bit more depth on it, but basically it's more or less about the time value of money. And but for you, like for you as an investor, what are your goals? Some people are totally fine with putting money in, letting the sponsor, renovate the apartments or whatever they're doing. And 3 years later, they exit and they get their money back. So you don't see your money for 3 years. That's, again, I'm not here, there's nothing wrong with that. But for me personally, I'm looking for monthly passive income that, is what I can live on. And so being able to invest in something where basically the next month you're going to start seeing passive income, that's an example of cash now is better than cash later, right? Less risky. Another rule is less risky cash is more important than risky cash, right? And again, like, risk is is okay, risk in my opinion, but there has to be a reward for the risk. You want to make sure that the risk reward is in alignment, right? What else do we talk about? We talk about more cash is better than less cash, and we get into a little bit more depth about that. And then the rule number 4, which is the most important rule, is never run out of cash.
Yeah. Yeah.
So I talk a little bit about how you want to have reserves intentionally set aside for each of the property, because you never know. We didn't know that a pandemic was going to hit, right? And so we had the reserves sitting there just in case, to be able to have the flexibility to give our tenants the opportunity to either, some of them wanted to defer rent or, cancel the rent. I mean, there was a lot of different scenarios that we had with our tenants. Luckily, we've actually done better than I would have expected, and that's a blessing. And it's a great market right now, and we're looking forward to more of this.
Yeah, I smiled when you said that less risky cash and cash better today is better than cash tomorrow, because I personally am not really into investing in developments. I'm not saying you can't make it work. I'm not saying you can't make a boatload of money there. It's just you're punting your risk timeline. So a development that hasn't broken ground yet, you've got 5 years of stability that you need to happen before you can get your good exit. And you might even get a better exit than if you had invested in something that gets you cash today. But knowing that you can get that consistent cash stream back allows you to divert it into other things and kind of divest your risk profile. Any thoughts or comments on that?
Yeah, I mean, I first of all, I always advise people to diversify their portfolio. So I don't have any absolute statements about these types of things. I think it's great to invest in things that are riskier with potentially high returns and things that are less risky with lower returns, just as long as it's in alignment. And then I also think that, development deals also can be, there's a place for it in my portfolio. I've invested in development deals but it's all a balance, in my opinion. So really, like, it's taking a kind of a step back, and really only you and maybe your financial advisor are going to be fully aware of what your situation is. But yeah, I like to have these types of conversations as well with my investors, just to kind of have a feel for where are they at with their portfolio, what are their goals, and so on and so forth. And so I spend quite a bit of time with investors, either existing or potential, to kind of have that conversation to understand what their expectations are. And yeah.
Yeah, I want to ask a transition real quick and ask about tenant and observing risk there. So in residential, it's really the credit profile of a single tenant. But in commercial, it seems like a lot of different things, like exclusivity and the language of the contract, percentage of sales that maybe a quick service restaurant gets, and things like that. Without giving away your secret sauce, how do you kind of look at your tenants when you're going into an acquisition and de-risk those tenants or that situation?
Yeah. So are you familiar with the phrase of unit economics?
A little bit, yeah, but
Yeah,
I want to
just
learn more.
yeah, real basic. Looking at if the tenant sells widgets either as a product or a service, how many widgets do they have to sell in order to break even? What is the profit margin on those sales, and so on and so forth? In other words, how many are they able to sell enough of their product to be able to afford the rent that they are contractually obligated to pay? And so some tenants will get in more detail on those types of unit economics on their business model. Some tenants that are just real big, like Walgreens, for example, like we don't necessarily need to get into that nitty gritty. It's more on we'll look at other aspects of the credit and the deal itself a little bit closer. But as far as like tenants that maybe not be publicly traded, like trying to dig into those unit economics is what's going to enlighten us as to whether or not they're really a fit for what we're trying to achieve.
Gotcha. And is there any best tips or practices around lease negotiations that you have with your tenants? So I've heard of things like blend and extend, where you actually lower the rate, but you extend out the terms and things like that. Any best practices there?
Well, I think in all aspects of business, I think building relationships is going to be the most important. Being aware of, how are they doing? Is this a good location for them? What are their pain points right now? What can we as a landlord do to help them be successful? Because when they're a tenant, we're on the same team. We're trying to make sure that they are successful. But as far as lease negotiations occur, I mean, yeah, blend and extend is a pretty popular tool to be able to extend the lease. That adds value because of cap rate compression. But in another type of cycle, that may not be the right way to, or it depends on what your goals are. Really, like, is this something that you're just going to blend and extend and try to flip out of it? With us, we're long-term holders, so that's not always necessarily what we're trying to achieve.
Yeah. Well, I forgot what I was going to say there. I had one more question on tenants, so we'll have to cut that one.
Okay.
We'll transition now into our last 5 questions. We're calling these the 5 toppings. The first one is, what is your favorite book, or what is something that you've read recently that's given you a paradigm shift?
Yeah. So Gary Keller wrote a book called The One Thing. And by far that was what was a shift for me to be able to focus on what I do now, raising capital for commercial real estate syndications. And truly, anybody that knows me knows that I'm just having the best time of my life right now. So
yeah, I want to nerd out after this podcast and talk about that, because I get shiny object syndrome too much. I've read the book, I've tried to implement it, I've reread the book, and I am terrible at it. So I would look for some guidance there. But it's a fantastic book for sure.
Mhm.
The second one is, I believe the person you'll become 10 years from now is directly correlated to the habits you do every single day. What's something you do every single day?
I'm a very fit individual, so working out, whether it be a run or working out here, I'm in a hotel room right now. Just I do like a push-up, sit-up, squat combination. I take all sorts of vitamins every day.
Yeah.
I try to meditate daily. I would say that's more of like an every other day kind of thing. Yeah, I call my mom all the time. So
I love
uh,
it.
all the above, I recommend.
Push-ups, vitamins, and calls with your mom, the way to
Call your mom.
success.
She wants to hear from you.
Our third one is, what's the best piece of advice you've ever received?
So one a piece of advice that I think about often, um, I believe was quoted by Walter Haley, who I learned in high school. Um, and the quote is that it's better to copy genius than create mediocrity. And that resonates deeply with me because I've been able to get pretty far in my career by studying underneath some really wonderful mentors, including my business partner, Corey Harkleroad and Jason Mittman and David Kahn, and some really wonderful people that are in my life. And I, I, yeah, so copy genius. I'm not saying don't create. I'm just saying it's better to copy genius.
Yeah, I went on this big track not too long ago, and there's this book out there that talks about like great artists steal. And they were basically just talking about how you just throw your little spin on somebody else's work, and that's what moves the ball forward in our society on information, creativity, and all that. So I use that with my sales team a lot. Good salespeople copy, great salespeople steal. So um,
Amen.
I can dig it. Our fourth one is, what's the thing you're most proud of in your life?
Yeah. So the first thing that comes to mind is family. My father, my grandfather, just the way that they have they both built their own types of businesses. Not in real estate. Just my dad's a dentist. And my grandfather was in the liquor business and did it with such integrity um, and just great reputation and success and hard work. And they really set a wonderful example for me. On a side note, fun little story. My dad just sold his dental practice at the age of 69. And instead of retiring, he's now gone back to school to become an architect. He's getting his master's in architecture and really just a lifelong learner and hard worker and passionate about architecture. And he intends on helping dentists design dental practices and at the age of 69. So anyways, it's never too late to start and just, follow your dreams.
Follow your passions. I love it. I love it. Our last one is, if you could sit down and eat a bowl of ice cream with anyone, dead or alive, who would it be and why?
So the first name that came to mind was Elon Musk, just with the amount of pioneering vision and scalability and just how he's on top of some incredible world-changing companies. I would just love to be able to sit down and pick his brain for as long as he would allow me to do so, for
Yeah,
sure.
I love it because one of the things that I think people misunderstand about Tesla is it's not a car company, it's an energy company. And really what he's doing is trying to create energy and batteries. By selling cars, he gets cash to create batteries, which will take him to Mars. And it's genius. I hope he lives long enough to see a lot of what he's thinking about out, because like that's my biggest fear is I've got these things that I see going on in the world and I just want to see how they'll play out. And he's actually doing it. So I don't think we've had that on the show yet, and I respect the answer. Well, Ben, this has been a fantastic conversation. If our listeners wanted to find out more about you or get connected with HJH Investments, where could we point them?
Yeah, so hjhinvestments.com/book is a great place to start if you're looking to learn more about commercial real estate syndication. I'm easy to find on all the socials at Ben Kogut. Last name is spelled Kogut, and happy to connect with anybody that wants to learn more.
Awesome. And we'll have those in the description. And I want to apologize. I said G, J. Those are two tough letters at the end of a Monday here. But thank you so much for your time, Ben, and hope to have you back on soon.
My pleasure. Thanks so much, Matt.